times when you're bullish on Euro and GBP, you could want to take a trade on one of the pairs and not trade both pairs. How would you know which of them is going to be a stronger pair that can potentially deliver more profits in the long term? How you know that is what I'm going to explain in this session. And how you do that is you can simply use Euro GBP as a confluence. Now, Euro GBP, this is simply Euro against the GBP. The same way this Euro US dollar is Euro against the dollar. You use it to know between dollar and Euro, which one is going to be the stronger pair. The same way you use Euro and GBP to know which of these two pairs will be the stronger pair. So let's say you don't want to trade Euro GBP. You just want to trade either Euro or pound, and you just want to know which of these two pairs will be the stronger pair that could deliver more profits. You just analyze this chart right here, and as you can see, this chart right here is consistently creating higher highs and higher lows, which shows that Euro GBP is bullish. So if Euro GBP is bullish, which pair between Euro and GBP is the stronger pair? It's going to be the stronger pair to deliver more profit in the long term.
The Euro.
Exactly, the Euro, because this is the Euro against the pound. So this right here is already giving you that telltale sign that Euro is going to be the stronger pair in the long term that will deliver more profits than the pound. So once you have that information, you can now use it to trade. You can say, okay, rather than me looking for trade ideas on Euro and pound, why not just dial in and focus only on buying the Euro on the long term? Does that make sense?
Yeah.
And so far you can see right here, the trade idea that was shared with the team. It's a little bit of a profit. Price went to the downside and came into the stop loss zone, but it's still into the risk parameters, but it still didn't take the stop loss. This is part of the reason why I always tell you guys to always use the overall low as your stop loss. Add a few pips extra. Reason is because of things like this can happen. And when it's happening, as long as your stop loss is here, 3 pips below the low, it's going to be safe. If price disrespects this low, then it invalidates this entire trade. And all you do is to be on the sidelines and watch for another break of structure on 15 minutes time frame before you now look for entry positions to get in. Now, having a look at Euro as well, the opening range gap and volume imbalance we talked about last week, you can see how price dipped into it. And we're just seeing this reaction. I personally would like to see a continuation to the upside on Euro. Why? You can see how price has nicely been lining up this low resistance liquidity here, lining that up perfectly. So I wouldn't be surprised to see a continuation to the upside on Euro. So right here, you can see low resistance liquidity. So all we do now is either you're looking for an opportunity to buy Euro if you're not already in the buy. So one thing to take note of is when the market wants to rally exponentially, you will see a lot of runs of liquidity, a lot of manipulations. In this case, you can see how we bought in here, we saw a rally, price came down to scare every single person that was in this buy into either closing the trade or running their stop loss. Because anyone who was on the buy from here would definitely throw their stop loss to like areas like this. And that was the first area price came for. And then the people that trailed the stop loss to areas like this, that was the second area price came for. Took them all out to make sure they're no longer involved in this trade. And now we're seeing a reaction to the upside. So personally, this week, we have major high impact news this week, so expect volatility. We have the CPI and PPI, CPI on Wednesday, PPI on Friday. I'll update you guys with that on the chat, on the group chat. I'll send the Forex factory news events we're expecting this week, but expect high volatility this week from Wednesday. I believe this market should really either impulsively go up or down. Personally, I'll choose to the upside because I'm bullish. And everything you saw right here was high impact news on Friday. There was a high impact news, non-farm payroll. Once the high impact news came out, it spiked price to the upside. And look what we came back into. Can any of you see this?
Yeah.
The fair value gap. And after we mitigated that fair value gap, we went straight down. This is to tell you, it doesn't even matter whether there's a high impact news or not. The algorithm remembers the fair value gaps. That is why this is an algorithmic trading strategy, because what you're learning is how to master the algorithm, how to know what the algorithm is going to do. You're not trying to learn how to draw some random lines on your chart and trade with it. You're learning how to read the algorithm. And with the moment you're able to learn how to read the algorithm, you don't even care whether there's a high impact news or whatever is going on. All you know is, even if there's a high impact news, it's going to still be algorithmic. Price will still come to either a fair value gap or a run on liquidity. It's either coming for fair value gap, liquidity, fair value gap, liquidity. You can literally see, if you literally focus on this entire move to the downside, you can see how price literally went to the downside, came up to a fair value gap here. We came up here for a fair value gap, mitigated it, dropped, came up to a fair value gap here. You can see that mitigated it, dropped. In this case, we came up for liquidity. Like I said, it's either a fair value gap or liquidity. We came up for liquidity, we dropped. We came up for a fair value gap and we dropped. We came up here for a fair value gap and we dropped. And we went straight down for liquidity. Does that make sense?
Yeah.